Hello people, very good to all of you. So guys, we successfully completed the basic accounting terms in the previous class. And today we'll be heading towards a brand new chapter, which, which is accounting procedure, which is going to teach us the rules of debit and credit. Guys, please mark this chapter as very, very important because this chapter is going to set our base very strong, in such a way that all the subsequent chapters that you're going to learn in your 11th standard and all the chapters that you're going to learn in 12th standard and so on, as long as you're pursuing your accounting career, this chapter is going to act as a very, very strong base, right? So in this chapter, guys, we're going to learn what is the meaning of an account, what is the meaning of debit and credit, very important. Third, what are the rules of debit and credit? Rules, very, 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 very important. Classification of accounts, balancing an account, and the significance of debit and credit balance. This is also kind of important. So it says that transactions are recorded in the books of accounts on the basis of evidence. So guys, in the very first class, we understood what is the meaning of transaction. Transaction means any activity happening between two people, in which one person is the business and another person is any third party, right? So transactions are recorded in books of accounts. Which transactions are recorded in books of accounts? Those transactions which are happening in the business, which can be measured in terms of money, it should be financial in nature, right? Business financial transactions are only identified and recorded in the business. Transactions are recorded in books of accounts. We understood the books of accounts on the basis of evidence. Now, this is something new. Now, you may ask a question, sir. I'm the owner of this business. All that has been recorded here is coming completely from my knowledge, right? There's nothing which is hidden. Then why evidence is required? So you have to understand one important point, that the primary motive of preparing accountancy is to identify or to ascertain the financial position and to assess the financial performance. Financial performance means what? Profitability. Financial performances means I have to calculate the profitability using trading and P&L account. And financial position is being ascertained by preparing balance sheet. So the profit and loss is something which is very important for the business owner. And so is equally important to certain other people, right? In that, the main important person that falls in that category is the government. Why? Because government are concerned with the taxes, and the taxes are related to your profitability. So how do you calculate your profitability? Income minus expense is equal to profit. So let's suppose my income is 15 lakh and my expenses, let's suppose, let's keep it very simple. Let's keep it 6 lakhs. So what is my profit, guys? 9 lakhs is my profit. So on the profit, let's assume that we have to pay 10% to government. So 9 lakh into 10 by 100, which means we have to pay 90,000 to government. Not everybody has the heart to pay the full amount to the government. So what can the owners do? Owners can manipulate the accounts. How? So my motive is to reduce this profit so that my tax is reduced. So what will I do? I will try to unnecessarily shoot up the expenses. Even though I've not incurred it, I'll try to shoot up. So for example, my real genuine expenses is 6 lakh, for which I have every evidence. Now to decrease my profit, what did I do is, my income I've kept it constant and I have increased from 6 lakh, I've made it to 12 lakh. I've increased my expenses. Therefore, this has become how much now? 3 lakh. On 3 lakh, 10% is 30,000. Now, there's something called as auditing. Auditing is a procedure wherein a chartered accountant is supposed to scrutinize all the accounts based on the evidences. So now if this gentleman is increasing this from 6 lakh to 12 lakh, I'll be able to identify this fraud by cross-checking the transactions with the evidences. What do you mean by evidences? For example, I'm purchasing, let's suppose, laptop. I'm into the business of buying and selling laptop. So we are purchasing the laptop. So purchasing transaction is being supported by an evidence called as purchase bill. So 6 lakh worth of expenditure, for 6 lakh worth of expenditure, there is a purchase bill. But for the remaining 6 lakh, there is no purchase bill. So through the auditing process, we'll be able to identify that for a particular given transaction, if there is an evidence or if there is no evidence. Right? If you're telling me there's a 12 lakh worth of expenditure done, boss, obviously you have to tell me the evidence for that. So this gentleman is producing the evidence for the 6 lakh rupees, and balance 6 lakh is unable to produce the evidence, which clearly means that it is a bogus transaction. It is a dummy transaction. Are you able to follow? That is why they say that in accounting, whatever transactions you record, it has to be supported by evidence. So if you purchase, the purchase transaction has to be supported with the purchase bill. If you're selling it, the selling transaction needs to be supported with the sales bill. If I'm incurring any other expenditure, if I'm paying electricity, it has to be supported with electricity bill. So every transaction, for example, if I'm making payment to somebody, I'll have to issue a payment voucher. If I'm receiving the money, I have to issue the receipt voucher. So all this documentation has to be supported. Now, what is payment voucher? What is receipt voucher? What is purchase bill? What is sales bill? All that you will understand in the 7th chapter. In the 7th chapter, all these documents are discussed in detail. As of now, all you have to understand is that anything that you account as a transaction in your books of accounts, that needs to be supported by an evidence. For any transaction, if you don't find an evidence, then something is wrong there. Are you able to understand now? What is the importance and the significance of evidence? So if evidence is missing, then which means that the transaction is fake. Now, another way of reducing my expense is to decrease my income. So in reality, my income is 15 lakh. So I have 15 lakh worth sales invoice. But in books where I recorded only 7 lakh. So 7 lakh is my income. I've kept the expense as it is. I've not touched the expense. I'm telling you another way of reducing the profit. So I've kept the expense as it is. So 6 lakh is my expense, 7 lakh is my revenue, and 1 lakh is my profit. So on this, if I calculate 10%, government is getting only 10,000. So now when I go and do the auditing, if I look at the file, the sales invoices for 15 lakhs, but the accounting that is being done is only for 7 lakhs. So which means that the clear intention was to reduce the profit. So the manipulation was done in the income account. Here the manipulation was done in the expense account. So everything has to be supported by evidence. If you tell that this is much is my income, then what is the proof of that? If you tell this is my expenditure, what is the proof of that? So everything has to be supported by evidence. No evidence, then things could be a little tougher for you. Transactions are recorded in books of accounts on the basis of evidence. That is, source documents such as invoices for purchase. We need invoices for purchase, invoices for sale. Another name for invoice is bill. Bill means invoice. Then something called as debit and credit note. What is debit and credit note? You'll understand in the 7th chapter, etc. So every transaction, guys, has to be supported by an evidence. You record an entry in the journal book, it has to be supported by evidence. Everything or anything has to be supported by evidence. That is the primary point. Second, while you account the transactions in the books of accounts, you need to follow certain rules, the rules of debit and credit. So rules of debit and credit are applied to each transactions and are recorded in the books of original entry. Books of original entry. Guys, all of you know that what is the cycle of the accounting process, right? It starts with transaction. Even before transaction, there's something called as event happening. Event means incident. Right? Event is an incident. So when an event happens, you need to ask yourself 2 questions. Is this happening? Is this happening in the course of business? First question is, you need to ask yourself, is this event happening in the course of business? Second, can I measure in terms of money? The answer is yes. Then that becomes automatically a transaction. So once you identify a business financial transaction and once you measure in terms of money, you have to start recording. So this is the place where the recording begins. Recording in form of journal. So while you do the recording in the journal, you need to follow the rules of debit and credit, right? So who has given this rules of debit and credit? What is this rules of debit and credit? So can you look at this gentleman on his screen? He is called as Sir Luca di Pacioli. He's an Italian mathematician, right? He's the Italian mathematician who's also commonly known as father of accounting. So if anybody asks you who's father of accounting, what will you say? Sir Luca di Pacioli. He's an Italian mathematician. He's a mathematician, right? He's the one who had conceptualized double entry system of accounting. Double entry system of accounting. What does the double entry system of accounting means? It says that every transaction is got two-fold impact. You take any transaction, every transaction got minimum two impact. Giving the double impact in a transaction, giving a double impact is called as double entry system. For example, I am doing a cash sale. All of you understand what is a cash sale? All of you understand cash sale? I have sold goods to the customer, and on the spot, immediately the customer has given me the money. So that is a cash transaction, and more specifically, it is called as a cash sale. Here, guys, two accounts are affected. There are two impacts in this particular transaction. First of all, do you agree this is a transaction? Because this is an event that is happening between two people. One is me, the business. Second is the customer. So this is a transaction. And this transaction is taking place during the course of business. And second, there is a monetary value involved. Monetary value means, it doesn't mean that if I give money on spot, it is monetary transaction. No. Any transaction which has got some monetary value attached to it, it becomes a monetary transaction. So this is a business financial transaction. After identifying this, you have to record this in journal. So for you to record this in journal, you have to identify how many accounts are involved in that. Or if you ignore accounts, if you forget, how many items are affected here. So one, if you see, sale item is affected. Sale means what? Can I see income? The ultimate motive of preparing the accounts, first is, you said, sir, trading and P&L account. The first and the foremost motive of preparing the accounts is to ascertain profit bar loss. To calculate the profit bar loss, the statement that we prepare is called as trading and P&L account. Clear? In trading and P&L account, what kind of transactions do we capture? We capture all the transactions which are of the nature of income, bar gain, and expenses bar losses. Then we prepare another statement to ascertain the financial position. So to ascertain the financial position, yes, to ascertain this profit and loss, no? Another name is to ascertain the financial performance. Financial performance means profitability. Financial position means balance sheet. So for that, we prepare something called as balance sheet. Here we capture, the informations pertaining to assets and liabilities. Correct? So if you see, we are revolving around four quadrants. Expense quadrant, expense bar loss, income bar gain, liabilities, and assets. So any transaction you take, it will fit in any one of these four categories. And every transaction will affect two categories, minimum two categories, right? So for example, cash sale. So can I say cash is one component? Cash, guys, we understood cash is nothing but cash in hand. It is classification, it is an item, it is an account coming under which classification? It is coming under asset. So can I say this is affecting asset? Sale means what? More and more sale means more and more income, more and more gain for the business. So can I say this is affecting my income? This is what Sir Luca di Pacioli is telling, that you take any transaction, it will have two-fold impact. It will have two-fold impact. Out of these two, any one will be debit. Any one will be debit. If one is debit, the other one will be credit. Now you may be wondering that what is this debit and credit? I'll discuss this little later. Now coming back, let's suppose I do a cash purchase. Cash purchase. Can I say even this is a business financial transaction? So I have to record this in my books of accounts. So here also, guys, two accounts are affected: cash and purchase. Cash is asset, purchase is expense.
Expense.
So double aspect, two aspects. Any transaction. Now you tell transaction of your whatever you feel like. You tell anything whatever you feel like. Very good. So business purchased goods on credit from Mr. X. So this is a purchase transaction. Purchase transaction. But for this, are we making the payment immediately? Because they've told that the payment is on credit basis. So here, which two accounts are affected? Can I say one purchase account is affected? And purchase account represents expense.
Expense.
Another liability account. So Mr. X is that liability. Technically, what do we call Mr. X as? Online people.
Credit.
Mr. X, yes, creditor. And creditor comes under liability. So one account liability, another account expense. Goods will not come. Because in this transaction, what I am supposed to remember is the money that I have to pay to Mr. X. So Mr. X को पैसा देना है. To give that money to him, I need to remember and make a note of his name in my books of accounts. Second is my purchase because it is my expense. If I don't capture my expenses, my profit will be haywire. Why goods is not coming into picture? Because goods is something at the end of the year. Because goods comes and goes throughout the year. Today you'll buy 50 goods, tomorrow you'll sell 20 goods, again you'll buy 30 goods, again you'll sell 40 goods. So what you do is, out of the books, you maintain a separate document called as inventory book or stock book, wherein you will record what all is coming in and what all is going out. At the end of the year, you will check what is the stock remaining. You'll check what is the stock remaining. For this stock, you will pass an adjustment entry. So goods will not impact. Goods stock is something which will not be a part of your normal business transaction. It comes, the entry is made in form of adjustment form. The entry is not done in a normal way. It is done in form of adjustment. Now, what is adjustment? That is something you will learn in the financial statement chapter, final accounts chapter, where we learn trading, P&L, balance sheet. No, that chapter you'll understand what is the adjustment entry. So whenever you buy goods or sell goods, you will not take goods into consideration. You will not record inventory. Goods will be recorded by way of adjustment entry at the end of the year. Am I clear? So you take any transaction, guys, it has got two impact. In that, one will be an impact of debit, another will be the impact of credit. Correct? So, and these account will be from any one of these four quadrants. You take any transaction, either it will be expense loss, income gain, liability, or assets. Any one of these four categories. And whatever you're selecting, in that one will be debit, another will be called as credit. So, no, that will come. That I'll talk in rules of debit and credit. Now, double entry system of accounting says that every transaction has got two-fold impact. In that, one impact will be debit, another impact will be credit. In that, whatever you identify, if you're identifying asset will be either debit or credit. If you identify something as income, it will be either debit or credit. If asset is debit, then income will be credit. So now how do you determine what is my debit, what is my credit? For that, you'll be learning the rules of debit and credit. Right? Before that, if I have to tell you plainly, you may ask, you may wonder, so what is this debit and credit? What is this debit and credit? You'll be shocked to know that this debit and credit is nothing but plus and minus. The plus and minus what we use in mathematics. In accounting, we call it as debit and credit. Then you may wonder, then why are we using debit and credit? So why can't we use plus and minus? Why? Because this plus will sometimes act as debit and sometimes it will act as credit. And this minus will sometimes act as debit and sometimes it will act as credit. So if you commonly use plus and minus, there was a lot of chances for confusion. So to avoid and mitigate that confusion, they came out with a new name called as debit and credit. Now, when debit will act as plus, when debit will act as minus, when credit will act as plus, when credit will act as minus. To understand that, we have to follow the rules of debit and credit. So in this entire chapter, we are going to learn this rule only. We'll understand the rule, and using that rule, we'll do applications of the questions. Are you able to follow? So normally people ask me, sir, DEBIT stands for debit. CREDIT is credit. Debit, credit. Sir, credits, for credit, the short form is CR. It is understandable. Short form is abbreviation. CR is understandable. But in debit, guys, in this entire word, where do you find R? Why are you writing DR? Debtor and debit both are different. Now, one mistake all the teachers make. When they use this journal entry, they say that cash account debtor. It is always debit. Most of the teachers, they use that word. Cash account debtor. It is not debtor. It is cash account debit. Debtor is my customer from whom I have to receive money. So DD, the initial letter might be same, but the meaning is absolutely different. So now the question that comes is, generally if you take an abbreviation, the abbreviation is nothing but any two letters coming from the main word. So for credit, CR is very apt, but for debit, DR sounds a little bit not okay. So can you tell me why? How this DR? So I told you, Sir Luca di Pacioli is a Italian guy, French person. So in Italian language, French language, this debit was called as debret, and credit was called as credere. So CR has come from here, and DR has come from here. So this is an Italian language, French language. So DR is the word abbreviated from debret, and CR is the word that is coming from credere. Now clear? So coming back, guys, rules of debit and credit are applied to each transaction and recorded in the books of original entry, in book of original entry. So where does the recording begins from? The recording starts from journal. Can I say this is the point of origin? This is the point of origin because this is where the accounting begins. Journal entry is the starting place where the practical accounting starts. So this is called as book of original entry. Journal is one book. Ledger is another book. Trial balance is another book. This is another book. This is another book. All these put together is called as books of accounts, wherein this journal is being given another name called as book of original entry. Original means what? The first place where the entry has taken place. So you have to remember this point because you may get this as a 1 mark question. 1 mark question. So we record in the book of original entry, that is journal. And there's something called a special purpose book. For a special purpose book, you have a separate chapter called as special purpose book or subsidiary book. So that time I'll make you understand what is the significance of this. As of now, just ignore this point. I'll be discussing what is a special purpose book in detail when I come to that exclusive chapter. And these transactions are supposed to be recorded in the chronological order. That is why we agreed. No? You have to record the entries in the book, journal book, in the chronological order. The transactions recorded in the books of accounts, the transactions what you record in the books of accounts are transferred from the journal entry or transferring. Technically, the word is posted. We don't use the word transferred. Transferred is in the normal language to make the common people understand. But once you are an accounts person now, the transaction to be transferred from journal to ledger is called as posted. So whenever I use the word posting, posting means what? Journal to ledger. Shifting of the entries from journal to ledger is called as posting. The transactions recorded in the books of accounts are posted to the specific account maintained in the ledger. At this stage, it is appropriate to define and understand the term account. Account, I told you in the last class, guys. Account means to count. Now, please understand this. This is a box. In this box, I'm filling with multiple balls, different color balls. Now, if I ask you to count and tell me, or just like that, tell me how much you have red balls in it, how many blue balls, and how many black balls, will you be in position to count and tell me? How? Loudly. Separating it. So how do you separate it? So what will you do is you will take three different buckets. You'll take three different buckets, and what you will do is you will take all the black balls and put it in the black bucket. You will take all the blue balls and put it in the blue bucket, and you'll take all the red balls and put it in red bucket. So first is you have segregated. In this box, everything is mixed. So it becomes complicated for me to count. So first simplification process is to segregate them. Once you segregate, now what will you do? It is easy for you to count. So this box is nothing but a journal. In journal, you record every transaction in one single place in the chronological order. So this red ball is purchase, your blue ball is sales, and let's suppose this black ball is liabilities. So everything is recorded in this particular box. Segregation, how much is total purchase, how much is total sales, how much is my total liabilities, that picture I'm not getting from journal. So journal ensures that whatever evidence I have, whatever bills are coming into my table, all that bill has to be recorded in this box in form of journal entry. So journal will take care of that. Whatever transactions happening in the business, every transaction without leaving anything has to be recorded and captured. So journal suffers with certain limitation. I cannot do the counting there. If I want to know what is my total purchase, total sale, journal is not able to tell that. So for that, we shift all these transactions one by one to different places in accounts, which we technically call as account. So this is called as a purchase account. We call it as a sale account, liability account. The intention behind having this multiple account is to count whatever is coming under the respective category. So I've shifted all the transactions to purchase account. Why? Because I want to know what is the total purchase throughout the year. When I said you that my total expense is 6 lakh, do you think I would have purchased one transaction for 6 lakh rupees? This 6 lakh is a result of thousands of transactions, boss. So how on earth did you land up at 6 lakh? It is because of ledger. So ledger is the person who's helping you to segregate the value and give a particular value to a particular account. Is it making sense, all of you? So the process of shifting the transaction from the journal to ledger is called as posting. Posting is a place, or ledger is a place where we segregate all the transactions category wise so that we can count. And this process is called as accounting, or this process is called as account. Are you able to follow? Online people? Hello?
So ledger is has these various accounts, right?
Yes.
Okay.
So ledger is a book where you'll find purchase account, which will capture all the information related to purchase. Then I'll have something called a sales account where I'll capture all the information related to sale. Then I have cash account where all the information regarding how much money came in, how much money went out. Then I'll have a separate account for my customer, debtor, to remember how much money is yet to give me, and out of that how much is paid. So each and every account will have its own significance and relevance. So you'll have multiple accounts. Account is a record of transaction under a particular head. What is a particular head here? Purchase is a particular head. Sale is a particular head. So account is recording of a transaction, or you can say shifting of a transaction under a particular head. I would rather use the word posting here. Account is a posting of transactions under a particular head. Where are you posting from? From journal to ledger. It records not only the amount of transaction, but also their effect and direction. What is the meaning of effect and direction? You learned this in the last class. Effect. Whether this particular account is in the nature of income or expense, gain, loss, asset, liability. So purchase account, what is the effect of the purchase account? Can I say it is an expense? Sale account, can I say it is an income? Gain. Can I say liability? This is liability. Liability means this will be particular thing called as creditor account. You will not find something as liability account. You have tried the account like creditor, bank, like that particular account, right? So this creditor is coming under liability. So each account will have its own effect, and effects will come from any of these four quadrants. Effect means choosing out of any of these four quadrants. Where is that? Yeah. This is one effect. This is one effect. This is one effect. This is one effect. Now, having identified the effect, you know the direction. If something is expense, you will direct the expense to trading and P&L account. If something is income, you will direct him to trading and P&L account. If something is in the nature of asset, you will direct them to balance sheet. If something is in the nature of liability, you will direct them to balance sheet. So now I'm able to understand. So account, the purpose is not only to count, but also to know what effect it has and where we have to direct it. To which particular statement. Are you able to follow? Online people comfortable?
Yes, sir.
So this account is, guys, if you see the format of this account is actually in T-shaped format. Account will be in T-shaped format. For example, this is cash account. So let's suppose, guys, you have 100 rupees with you, or let's suppose by doing a cash sale, you have earned 1,000 rupees. Correct? This is on day one. On day two, guys, you did a further cash sale of 500 rupees. What will I do? Add or minus? Add. So plus 500. Then on the third day, I did further cash sale of another 1,500. What will I do with this 1,500? So plus 1,500. So this will give me what is the total money is there in my hand, which is 3,000 rupees.
3,000.
Now from this 3,000, let's suppose on a particular day, on the fourth day, let's suppose you have spent 500 rupees from that for purchasing, for doing a cash purchase. So cash purchase. What will I do? Plus or minus here? Minus, because here the effect of cash purchase is that it reduces my cash. To reduce something as per mathematics, we have to minus, subtract. So minus 500. Let's suppose I purchased a stationery. I purchased a stationery for another 500 rupees. So my cash will go down. So I have to minus 500. So what is the balance? 2,000. So now this is one way of presenting it. Who presents this? Layman who does not know accounts, no, he will present in this way. The person who is learning accounting, accountant will not do this kind of presentations. They will do as per the rules, what is being taught to them. So here, guys, they say that whatever account has to be divided into two parts. This is called as left hand side and this is called as right hand side. In accounts, left hand side always denotes debit. Hello? Left hand side always denotes debit. Right hand side will always denote credit. Now, every time you prepare an account, when you do the ledger, we'll be preparing multiple accounts, 30, 40 accounts. And you will be compelled to write debit and credit in your exam. So every time if you write debit, credit, full, will it not be time consuming? So they say that in exam, you can write DR and CR short form. So left hand side is called as debit, right hand side is called as credit. So whenever you open an account, left is debit, right is credit. Now, all that which is to be added will go to one side, either debit or credit. Based on what? Based on the rule that we are going to learn in the next class. So whatever you're supposed to add will go to one side. So I'm putting on this side, 1,000 plus 500 plus 1,500. So whatever is going to increase your account balance, you'll put on left hand side. This is not true for all the cases. I'm just giving an example here. When we study the rules of debit and credit, you will automatically understand which will go to debit and which will go to credit. I'm just telling, randomly I'm putting. So I'm putting all this plus amount on one side, which is 3,000. And all the minus ones I'll put on the credit side, which is 500 and 500. So total amount that you have is 3,000. And the amount what you spend is 1,500. Sorry, 1,000. In such a way that you'll get a balance of 2,000. The account is prepared in such a way that all the items that you have to add will come on one side, all the items that you have to minus will come on the other side. And when you set off these both, you'll get a balance. So every account will have a balance. So here, if I prepare a cash account and if I see a balance here, which means this much money is there in my hand. Right? Now the problem is, all the plus I put on debit side. It doesn't mean that whatever is getting added always will come on debit side. I told you very clearly that sometime plus will come as debit, sometime minus will come as debit. Sometime plus is credit, sometime minus is credit. So for that, we have to learn the rules of debit and credit. As of now, I'm just making you understand that any transaction that is happening, it is normally by a layman, it is prepared in the statement format. We are not preparing in the statement format. This is a statement format. We are not using the statement format. We'll use the account format. We call it as a ledger format. This is the format. We'll be discussing about this in detail. Here, what am I doing? I'm just going to give an outer line. How do you prepare a cash account? On left hand side, what do you record? On right hand side, what do you record? We have exclusive chapter. Here in this chapter, they are only trying to make you understand how an account look like. It's a T-shaped account. This is the center line. This is the left hand side. This is the right hand side. In left hand side, you have the date. Boss, I'm buying a good today. Or let's suppose I'm selling a good today on first. So I need to record the date, boss. So there'll be date column in that. Then there'll be a particulars column. Particular means what? To explain what is the nature of the transaction. Then you'll have the amount. What is this? You ignore. I'll tell you what is this later. Then amount. So this is left hand side. This is a center line. So right hand side, if I made a cash purchase. So on what date you made a cash purchase? What is the nature of cash purchase? And what is the amount? It has been recorded. Are you able to follow? You will not understand anything as of now. This you will discuss in detail in the ledger chapter. Now, since they've given the information here, I'm just trying to put something, roughly to your mind so that you understand what is happening. No, all that will come. You'll understand. We have almost 5 classes to go with that. So once I complete this 5 classes, you'll understand everything. I'm just gradually taking one by one. Meaning of debit and credit. Before we go to rules of debit and credit, we have to understand what is the meaning of debit and credit. Debit refers to left-hand side of an account. That's what we did. This is the left-hand side of account. Left-hand side of account is always represented by the word debit. Debit refers to the left side of an account and credit refers to the right side of an account. This is account. Right hand side is credit. Always. This is one of the rules that you will follow always. So that we have uniformity. Now just imagine, if this is not followed, then you will put debit on left and someone will put debit on right. Then accounts ka khichdi will happen. So to avoid that, a set of rules is given which uniformly everybody has to follow. In the abbreviated form, DR stands for debit. Because every time if I write debit is very long, boss. So short form is required. So debit ka DR. So now are you clear how this DR abbreviation is come from? It is coming from the Latin word, Italian word, debre. And CR is coming from credit. And CR is the abbreviated forms of credit. Now, an item recorded on the debit side of an account. That is, when I recorded these 3 transactions on debit side now, I say that this 1,000 rupees is debited to the cash account. If I record anything on the debit side, I say that account is being debited. If I record anything on the credit side of the account, I say I have credited that account. What did you do with this 500? I credited to cash account. What did you do with this 500? I credited to cash account. What did you do with 1,000? I debited to the cash account because it is on the debit side. So debited. Debited to where? To debited to cash account. In whichever account you're recording, that account's name you have to mention. If I record anything 1,500, I say it is debited to the cash account. An item, this is an item, guys. Cash sale 1,000, no, this is an item. This is another item. This is another item. So all these items are independently called as transactions. So an item recorded on the debit side of account is said to be debited to that account. An item recorded on the credit side of an account is said to be credited to that account. Now, this is very important. Why? Because when we start doing the practical question, the question will say that 1,000 rupees is debited to cash account. This means what? The 1,000 rupees is recorded on the debit side of cash account. So you have to go and record that. The value has to be recorded there. So if this line is not understood, you'll not be able to do the practical question. So what are we doing now, guys? We're setting the rule. We're understanding the rule before we play the game. All of you know what is Kaun Banega Crorepati? Is it possible to play the game, without knowing the rules and regulations? In Tamil, we have, what is that? Ningalum, Ilalam, Orugodi. Am I right? Tamil, I speak well. So, any game. So, what does Amitabh Bachchan do in that? He first explains the rule. Right? Now, if you answer this question, you'll come to this level. If you answer this question, this level. If you wrong answer, if you do a wrong answer, you'll come down to this level. Then you have this option, this lifeline. So he explains everything. Only then you can play the game. So just imagine, you have no idea about cricket rules and regulations. Will you be able to play the cricket game? Any game for that matter. Chess you take. Chess has got a set of rules. There is a particular way in which the horse can move. There is a particular way in which your elephant can move. There is a particular way in which your Rani can move or Raja can move. King or queen for that matter. Right? So every thing has got its own rules and regulations. So without knowing the rules, you cannot play. So today, what are we doing, guys? We are learning the rules of accounting. Only if you're familiar with this, you'll be able to do the complicated accounting part. Both debit and credit may represent either increase or decrease. Now listen to this point very carefully. Increase means what? Plus. To increase something, what will I do? In mathematics form. Add. To increase something, I will add. To decrease something, I will minus. So look at the statement. It says that both debit and credit may represent either increase or decrease, which means what? Debit can be both plus and minus. Credit can be both plus and minus, depending upon the nature of account. So next class, we'll understand what is the nature of account. That is where your rule starts. That is where rule starts. When debit will be added, then debit will be subtracted. The understanding example, you have multiple of it in the next class. I'm just trying to go in order so that you don't miss out any part. So debit sometimes plays a role of plus and minus. Credit sometimes plays a role of plus and minus, depending on what is the nature of account. Now, how do we determine what is the nature of account? That is something you will learn in the next class. The rules of debit and credit depends on the nature of account. Rules of debit and credit. Under double entry system of accounting, we have come across this word somewhere. We have come across this word. Father of accounting, Luca di Pasquale, is the one who has invented the concept of double entry system of accounting. So what does he say that? He says that under double entry system of accounting, each transaction has two aspects. Didn't I say that? I said that every transaction will have two impacts. In that, one will be the impact of debit side and will be the impact of credit side. See, I told you 1 or 4 quadrants. I'm telling you that two aspects will be there. In these two aspects, you will either classify it as expense, income, liability, asset. If we're not talking about this, we're talking about once you identify something as expense and asset. Now this expense will be debit or credit, or whether this asset will be debit or credit. That is aspect. So double entry system is going to tell you that once you pick the nature of account, please understand the rule of debit credit depends on the nature of account. So if I do a cash sale, cash is an asset, sale is an income, is the procedure of identifying what is the nature of account. So when you say cash is asset, which means you identified that the nature of cash is asset. If you say sale is my income, which means you identified the nature is income. So we are not talking about the nature. We're telling that once you identified the nature, having identified the nature, identifying the nature is the first step. After identifying that, You have to tell one is debit, another is credit, or this is debit or this is credit. This identifying something as debit and something as credit is called as a double entry system of accounting. So under double entry system of accounting, each transaction, this is one transaction, has two aspects. In that one aspect will be debit, another aspect will be credit. One aspect is debit, which is either receiving aspect or incoming aspect. How do you know it is receiving or incoming? When we follow the rules. When we understand the rule in the next class, no? That time we'll know that receiving and incoming aspect means debit. Giving or outgoing aspect means credit. So another aspect is credit. So debit and credit aspect of a transaction forms the base of the double entry system of accounting. Purchase of goods in cash or credit, that you have to complete. Purchase of goods in cash, yes. Yes. I'm not talking about that. That will all be next class. I'm not getting into the transactions at all. Anything related to this, you may ask, sir, what is debit credit? Again, I can explain. What is, increase, decrease, whatever I'm discussing here, this alone you can ask me today. How this is applied, plus, minus, how the application of the rule happens, that is something I'll teach you only in the next class. I'll not touch upon that today. I'll not touch upon that today. Yes. Yes. For that, you have to wait for the next class. I can understand your eagerness because you are way ahead in school. So you want to relate and conceptually understand. But if I touch the rule of debit and credit, the problem is I'll take at least 1 hour or probably 1.5 hours to explain the rule. This is one rule. Traditional classification is one rule. Modern classification is another rule. So the reason why I'm not touching this is because I need exclusive 1.5 hours to explain peacefully each and everything. Whatever questions you're asking is completely pertaining to this, which I will not be discussing today. This is a surprise element. Yes, boss. Double entry system is basically, I told you, in accounting, we have to follow a process, a system. Look at the first line. Look at the first line of what is accounting. Accounting is a systematic process. So we have to have a system. The name of the system is double entry system. So we agreed that for accounting, we need to have a system. Yes. The system's name is double entry system of accounting. So who has given this double entry system of accounting? Sir Lucati Passio. It says that every transaction will have two-fold impact. In that one will be always debit and another will always be credit. Any problems, any doubts here? That is next class. No, I'm not getting into here. I'm not getting into this part. Now, this is not that simple as it sounds or as it seems. I'll explain the traditional classification and then I'll complicate your life by challenging this rule. Right? You'll see very soon in the next class or probably 2 classes down the line, I'll be challenging this rule. You understand what is the meaning of challenging a rule? You're questioning the credit worthiness of the rule. I'll be doing that. And let's see how many of you answer that. Yes, boss. How? That is the entire thing you're going to learn in 11th. So you asked a question which you're going to learn in the entire accounts. In 11th, what are you going to do? You're going to identify the effects. You're going to identify the directions. All that is what you're going to learn in 11th. So I don't think so. With this, you should have a lot of doubts. I know you have doubts, just subsequently to be covered topics. So I'm not touching that. Until I don't explain you the rule, nothing will be clear. Everything will be vague. So rules of double entry or rules of debit credit are formed on the basis of these two aspects in each of the business transaction. There are two approaches for deciding when to write on the debit side of accounts. There are two approaches, two rules, which will tell you when you should debit certain thing and when you should credit certain thing. That is when account should be debited and when account should be credited. The rules on the basis of which the decision is taken is called as rules of debit and credit. Traditional classification is one rule Modern classification is another rule. So we'll be spending next 2 classes only to understand what is traditional classification, and thereafter 2 more classes to understand what is modern classification. Am I clear? So to summarize what we have discussed so far, guys, we've understood that for me to record anything in my business, first of all, it has to be a business financial transaction. First of all, it has to be a business financial transaction. Business financial transaction means any transaction that is happening in the business should be measured in terms of money and money or money's worth, and it should happen between 2 or more people. So it is called as a business financial transaction. Second, every transaction that you record through journal entry should be supported by an evidence. Anything that you do, anything that you record has to be supported by evidence. So using the evidence, you record. The recording is taking place in journal. But the problem with the journal book is that I'm scattered. I'm having a lot of transactions in the journal book. So if I want to specifically know a total of a particular item, then journal does not help me with that. Therefore, from journal, I identify the same nature of transaction and post it to a place called as ledger. In ledger, we open a T-shaped account where the counting of the items are done. How many total purchase, how much is the total sale, how much is the total land and building, how much is the total furniture, how much is total cash, how much is the total money in the bank account. So the totaling of each item is being done in account under the category of the ledger, or you can say the ledger book. So the process of accounting is done in a systematic way, and the system that we follow is the double entry system of accounting. So double entry system of accounting is something which is being introduced or given by Sir Luca di Passio. He is called as father of accounting. Next, he's an Italian mathematician who has discovered the concept of double entry system of accounting, where he tells that every transaction will have a twofold impact. In that, one will be debit, another will be credit. So what is this debit and credit? Debit and credit is nothing but plus and minus. So if it is plus and minus, why don't we call it as plus and minus? Why? Because sometimes debit will act as plus, sometimes minus. Sometimes credit will act as plus, sometimes minus. If you take the movies of Shah Rukh Khan, has he acted only hero in all the movies? He's been villain as well, right? See my linkage, man. You should appreciate that. On spot. Are you able to follow? Online people, are you able to follow?
Yes, sir.
Yes, sir.
Yes. So this is what we have learned. So now, how do we identify something to be debited? How do we identify something to be credited? It's something which we learn through the rules of debit and credit. So there are 2 rules of debit and credit. One is traditional approach. Second is modern approach. Right? So this much only we have learned today, guys. That's all. With that, I'll wind up today's session unless and until you have doubts. But the problem is if I leave this forum for doubt now, you'll ask what all doubts I'm supposed to clarify in the next class. Yes, Bhavyansh. What is the work of an auditor? Auditor means chartered accountant. Chartered accountant has got multiple roles. In that, one of the role is auditing. For example, you run a business, right? You record all the transactions, you get all the profitability, you have the balance sheet and all. Whatever you have done, somebody has to check it, whether it's right or wrong. Because in accounting, if one transaction goes wrong, then boss, your profitability is shaken. Your balance sheet is completely shaken. Government is relying on this document for profitability. Investors are relying on this document. Owner is relying on this document. So imagine the accuracy this document should carry. To check this is double correct. A CA carries out an auditing function where he checks everything. From pin to ship, everything has been properly checked. Whether you have recorded all the transactions, are there sufficient evidences for it? Have you followed all the rules and regulations that has been taught you in this entire accounting and auditing process? Everything is being followed or not? So that process of checking account, in simple terms, it's called as auditing. Right? Now, no more questions. Relax. A lot of things. I'm telling you, I've just started accounting. I have a long way to go to confuse all of you. And I'll leave no stones unturned to make you confused. Because I feel that if you want to get a clarity of something, first you should be, confused. Only if you're confused, if you're confused, that means that you're thinking. Somewhere something linking is happening, but that link you're not getting it right. So that's when I'll come into that place and I'll just connect those two things where the bulb will. Yes. Are you able to follow? So I'm just leaving things scattered here and there. that I can look at your faces. I'm getting that joy, because now I get that more excitement. Okay, they don't have to teach them, right? So just have that suspense. So we'll be seeing in the next class. So online people, are you comfortable? I can't see your videos, man. Advait,
Yes, sir.
Niharika, Ananya, switch on the videos. Advait, Niharika, Ananya, do you have any specific queries for today?
No, sir. Yeah. I just want to know more about debit and credit.
Absolutely. The next 4 classes is like
I think
completely
I'll
about
have
debit and
to
credit.
do-
In detail, we'll be discussing. In detail. Advait, comfortable?
Yes, sir. Kind of, yeah.
Kind of? Okay, good. Yeah, of course, it has to be kind of, because only we have started today, the concept of debit and credit, and that too I've left it in suspense. So obviously you will have that, incompleteness feeling. So I accept your point, Advait. Kind of, you'll understand. So with that kind of, guys, I sign off for today's class. I'll see you all in the next class, which is on Tuesday from 7 to 8:30 p.m. Until then, bye-bye. See you. Take care.